Hi and welcome to the channel. Today we are going to analyze Kellogg's. First we'll find out the dividend score, and after that we'll go into fast graphs and check the valuation. We can see that Kellogg's has a market cap of $25 billion. The stock price while recording this video is $73.83 and they operate in the food products industry. I guess most of you are familiar with the brands. Here we have a graph spanning 10 years and we can see that Kellogg's, the black line, has not performed nearly as good as the S&P 500, which is the blue line. And this is with dividends reinvested. Now some more financial data. The sales the past 5 years has only been 1.8% positive annually. That's not good enough. The earnings per share though, quite strong, 17%. But the analyst expects some weaker earnings ahead, 1.64% only. The return on capital is quite good, not extremely strong, but still 13%, which is a check mark. But the debt compared to their free cash flow is quite high. It would be 5.86 years to pay it back. Now some yield data. A strong dividend yield at 3.21%. They are not buying back any shares, not last year at least. And the payout ratio at an acceptable 56%. The growth rate is quite slow though, about 2%. But they have been growing their dividends for 18 consecutive years. So here we can see that it's actually 5 out of 10 on the dividend score. Now let's check the valuation. Here we have loaded Kellogg's in fast graphs, set it to 18 years, so we have 15 historical years and 3 years of projection forward. And yeah, the orange line is the earnings, the white line is the dividend, and we can see that it's an extremely stable company. And being a consumer defensive, it's not that high growth during this period, only about 3%, compared to the S&P, which is about 7 to 8% during this period. So quite a slow mover, but not that big of a volatility also. It's a BBB rated company, and if we plot their normal PE, which is 16.84, and the current stock price, we can see that it actually bounces around the earnings and PE line, and right now it's actually a bit overvalued. If we project out though to late 2024, analysts would expect an annual rate of return of about 3% with these estimates. Let's see if the estimates usually are right in the analyst scorecard. There are quite some analysts covering Kellogg's, about 20. And we can see that it's extremely predictable. They only miss their estimates 8% of the time. Please like and subscribe, and also watch one of my latest videos where I recommend 5 dividend stocks for December. See you soon.